Welcome back in the ongoing conversation about the end of cycle, end of the bull market in 2025. We're now hearing that Michael Burry is short on the AI stocks. In today's video, we're going to be exploring where we are in the cycle. More specifically, where are we in regards to the crypto cycle? We have been calling on this channel since the middle of 2025, the top of the market. And by the way, we were right. That was the euphoria phase. That was when all the Bitcoin treasury, Ethereum treasury companies, AI plays were starting to pop up, and people started to get maximum bullish, even though we already gained in price significantly since the bear market bottoms in 2023 into 2024. But now that we're at the end of the cycle and people are now buying into individual stocks, now they want you to believe that we're not at the top of the market. But I like to not necessarily listen to the sentiment of X or Twitter or social media or the YouTubers that are trying to pump their bags to exit because they didn't exit in the middle of the year. We are ahead of the curve. And this, in my view, is the way to go, especially when we don't know where the end of the cycle is. So make sure you guys are subscribed to the channel. Don't forget to give this video a free thumbs up. Thumbs up are free. Crypto is never free. And this advice is, at least for now, free here on YouTube. So do me a favor, give the video a free thumbs up. And as you guys know, we are here on the Bitcoin halving, or at least days since the Bitcoin halving, on the halving tracker, which is on the screen right now. Now, as I've explained, endlessly, my viewers, my regular viewers, you guys are so ahead of the curve. Like, I want you guys to think about it. You're ahead of Wall Street. You are ahead of most of the YouTubers, most of the influencers, most of the quote unquote experts and chartists and Forex traders. You guys are way ahead of the curve. And why are we ahead of the curve is because we learned from previous cycles. 2017 into 2018, many of us, if you were in the market, most people actually on my channel who are here today joined the channel sometime after 2020 or during that 2020 cycle. And 2017 to 2018, we lost a lot of money because we were listening to the influencers saying, buy the dip, buy the dip, buy the dip, buy the dip, literally at all-time record highs. And now we're literally at all-time record highs still in Bitcoin and basically at all-time record highs around in Ethereum. People are like, no, we're not at the top, Cryptoviser. There's no way that we're at the top of the market because I personally didn't feel euphoria in the markets. It's like, the market doesn't give a whether you felt it or not. We were there, okay? And we're going to be kind of breaking down a little bit of that in a little bit. But before we get there, let's understand what the experts, the traders like Peter Brandt, and one of the reasons I like following Peter, again, I'm not necessarily saying I agree with everything that he puts out there, but I like to listen to his opinion because, number one, I do agree with a lot of what he puts out there. And he is a non-emotional trader, right? He has been trading these markets for literal decades. And he looks at the charts, he looks at the sentiment, and he kind of puts it together and says, this is most likely where we're at. But he's never 100% on one side or the other of a trade because he understands a trade is just a trade. A lot of people on Twitter, a lot of people on X, a lot of the influencers, they are emotionally involved in these plays because, one, they have their own money in it. Two, they're possibly getting paid, or you get more views when you're bullish than bearish, right? The big YouTubers, they get a lot more views in this channel, which is totally fine because that's who we're trading against, guys. We're trading against the bulls. And the bulls never become bears. They are 100... MicroStrategy has literally come down almost 50% from its all-time record highs in 2024, about $400, $450. And there's still bulls like, oh no, this is the most bullish time in history. And it's like, you've been literally saying that on the whole way down. Meanwhile, us on this channel have been saying, we need to bet against this stock because Michael Saylor is diluting the shares, so the price of the stock has to go down. But the people holding the stock, they're like, no, it's so bullish, it's bullish, it's bullish, it's bullish. And it's like, everything cannot be bullish at the same time. There have to be bearish sentiment. There has to be a bearish correction. There has to be a downside to the market whenever you're in massive upside. So let's explore a little bit more. Peter Brandt responded to this chart from JDK Analysis that says, just curious, if the top were to be in, which I don't think it is as of now, posted at the beginning of November 2025, where would you look for a potential low, Peter Brandt? And this is a chart of Bitcoin versus the dollar, 1 month candles, I think. Yeah, 1 month. And you can see the different lines here. I don't know what they are. You guys know I'm not a chartist. But Peter Bram responded saying upper green band, so around $60,000 level. I hope you're right about not yet a high. But he's not right. We already hit the top of the market. And even if we didn't hit the top of the market, if we're going above $126,000, which as of me making this video was the top of the market, like the top in terms of price, anything that we see after that is just volatility because everybody wants to get out at this point, right? But we're going under $100,000 if we're not already there by the time you're watching this video. And so the upper green band right here is in the $60,000 range, which I agree with Peter Brandt. Number one, this follows previous cycles on the low. And number two, we have to keep in mind that every single cycle we have tested previous all-time highs in the bear market. So in the past cycle, we hit 15,500, which was slightly under the previous high of $20,000. And the previous cycle before that, we hit lows that were the highs of the previous cycle. And so because $70,000 around that range, 60 to 70,000 was the 2021 top, we are going to test that or potentially go even below it. I think we're going to go much lower just based on the sentiment that everybody's still bullish, even though we keep coming down and all the indicators are showing us that. And Peter Magoo on X, or Hodl Magoo, I should say, that was Peter Brandt that we were talking about. Hodl Magoo wrote on X, M2 money supply chart bros are in shambles. And I would completely agree with this sentiment. Every time I post about the top of the market already being hit, I get these posts like, well, Cryptoviser, according to this chart, Cryptoviser, there's no indicators that say that we're at the top. It's like literally all I've been showing you for the past 6 months or so, not really 6 months, about 4 or 5 months, is indicators that we are at the top of the market. And people will watch the video and say, well, I didn't see any indicators that we're at the top of the market. It's like, well, you missed the entire context of the last 5 months of my videos, which is your problem, not mine. So if you want to be bullish and go buy up the market, go do it. Go do it. We on this channel will be betting against that strategy, period. Done, right? At least in the medium term. And you can see M2 money supply continues to go up. But Bitcoin chart is wavering and showing a lot of more weakness. But the bulls will say, well, it's not over. You know, it's not over. The money twos, we're going to have to hit money twos, M2 money supply because in previous cycles, this happened. In previous cycles, this happened. Guys, we're not in previous cycles. We are in the cycle in front of us, not the cycle that we want. You can literally pull up, there's thousands of charts. We talk about this with Raoul Pal, his company GMI. They have 5,000 charts that they have in their portfolio of research. Raoul Pal could literally pull up probably 100, let me rephrase. They have 500 charts, I think, or 5,000 charts. He could pull up probably at any one point 25 to 50 charts that will exactly mirror any thesis that he comes up with. 100%. But in my view, the only chart, and it doesn't mean that he's wrong, it just means that I don't agree with his analysis of the market, right? And that's fine. We can disagree. You guys can disagree with what I'm saying. Doesn't mean I'm going to be right. Doesn't mean you're going to be right. But so far, I've been right. Anyway, this is really the only chart that this is like the God chart in Bitcoin. And it tells us no cycle we've hit highs past 550 days, and we are past 550 days. And even if you think, well, Cryptoviser, this time is different, which I'm seeing a lot of, and it's not going to be different. How much higher do you think we're going to go? You think now we're going to go parabolic? Now we're going to go up to $1 million this cycle? People say, Cryptoviser, maybe we'll hit 200,000. Who cares? Everybody is expecting that. Most likely, it's not going to happen. So yeah, the M2 chart bros are in shambles. And then Jesse Olsen, who is a well-known trader on X, swing trader, obsessed with charts, he said, what if this crazy Bitcoin chart continues to play out eerily similar? And he posts the Wyckoff indicator chart right here, which you can see has phase A, B, C, D, and E. We've covered this in previous cycles. But effectively, we are in the downtrending phase, and you can clearly see that here. It is playing out exactly as he charted months ago. I've showed this over and over on my channel, and people will still say, well, Cryptoviser, I don't see any indicators that we're heading into a bear market. I just showed you three charts that show you that we're not in a bull market anymore, that we're rotating into a bear market. So if you want to keep bidding it up, keep bidding it up. We're going to keep betting against it. That gives me more opportunity to bet against the market. The higher we go, the more opportunity we have to bet against it. Because at some point, the market's going to precipitously fall. And in my view, it's already underway. Jesse Olson also posted this video from Arthur Hayes with his commentary. Let's listen to Arthur Hayes first, and then we'll break it down and give you guys Jesse Olson's take on it. And by the way, don't forget to give this video a free thumbs up. We upload every single day of the year to bring you the latest happening in the financial world. Let's listen to Arthur Hayes. And we're going to play this at 1.25 speed.
And the new prime minister, I can't pronounce her name correctly, so I'm not even going to try. She is talking about printing money to help households pay for goods and services because of the high inflation that was caused by the printed money of the previous administration, who she loves, Abenomics. So they're printing money in Japan, and then the ECB is going to have to print more money to save the euro. So again, all around the world, the politicians are going to print more money. And so I see it as a completely different scenario than, let's even talk about 2021, when Jerome Powell was talking about tightening credit, when every central bank was tightening credit because of inflation. We are in a scenario where the politicians around the world, regardless of where you live, are talking about spending more money without raising taxes. And so that's why I believe that this particular cycle will extend. I think it's going to extend into the 2027, 28 time period. But again, who knows how long it will go for. But as long as the politicians are going to print money to hand out goodies to people to support them, we're going to keep going higher as a crypto ecosystem.
So we went from 4-year cycle to extended cycle to now 8-year cycle. Guys, that's called the next cycle. What Arthur Hayes is explaining here is us going into a bear market and then going back into a bull market. Because again, if you look at the halving chart, every previous cycle from the top of the market to the bottom of the market takes approximately 1 year. Last cycle, it was exactly 1 year to the day from the top of the market to the bottom of the market. And then we went from bottom to top before the Bitcoin halving again. So that's literally another cycle that we're going to be going through. 2028 is the next Bitcoin halving. And that's what Arthur Hayes is saying. This is what we've talked about on this channel before, that people went from a 4-year cycle to saying there's no more 4-year cycle. We have an extended 5-year cycle to 6 years. Now we're talking about an 8-year cycle. That's just called 2 Bitcoin halving cycles combined. Jesse Olson said it's no longer the Bitcoin 4-year cycle or 5-year cycle because it's now the 7-year cycle. Price is going to retest the 200-week moving average before it ever hits $1 million. I would agree. And the current price of the 200-day weekly moving average is $55,000, and it's a slow moving average. So effectively, Jesse Olson is mirroring what Peter is saying based on different analysis and different charting, but is saying the same thing. And it also goes in line with my thesis that we are going to go into a 1-year rotation into a bear market. And again, people, the bulls, they're not going to admit this until we're at the absolute bottom. They're just not, right? Like recently I sold some of my crypto, and there's still people on my channel saying, oh, well, Cryptoviser, we're pumping. And it's like, we're still down 90% from the all-time highs that we hit last year. And you're telling me that we're pumping a little bit since I sold and like I'm supposed to worry about it? I've already moved on. I'm not even thinking about that crypto or that stock anymore. Each trade is an individual trade. And just because you bought doesn't mean that we're going up. And if it is, are you selling? Are you taking profits out of the market? If not, well, good luck as we rotate into a bear market. This is a bull trap. The bull trap has been getting set and is set since effectively August. You can go look at my channel. I posted a video called The Bull Trap, where Federal Reserve Chairman Powell basically laid out what was going to occur. And I laid out my thesis. And so far, my thesis is playing out exactly as I have posted here on the channel. These are my opinions and my analysis of the market. You don't have to agree, like I said, but everything that I've said that is going to occur in the market so far has occurred. It's not necessarily occurring the day after I post the video, but it occurs within a very short period of time thereafter. And to prove that, most of my videos are delayed by at least 1 week, and the info in them is still valid when they post. Anyway, Jesse Olson posted this other chart that says Ethereum is back at levels not seen since the liquidation event, also known as Target 3. The probabilities continue to increase of price hitting the Target 4. And so you can see Target 1, Target 2, Target 3, Target 4 is down here in the $3,200 to $3,000 range for Ethereum. And I would agree, the macro is down. The trend is down. The trend is your friend. And if you guys don't agree with me, guys, go to my YouTube page, youtube.com/the Cryptoviser, or click my logo down below, and then click on the posts tab. In the posts tab, I said, we are now exiting complacency and exiting anxiety phase, soon rotating into the denial phase. Rapid declines in the overall crypto prices is already underway. And people comment there, no, Cryptoviser, we're still in the optimism phase. We're in the belief phase. It's like, okay, well, you're in the belief phase. Everybody else in the market is out of that phase months ago. I also said, true or false, the whales sold their crypto in June and July of 2025. Believe it or not, the results of this poll, of this quiz, I should say, because there is a correct answer, it's 50-50. 50% people get it wrong. The whales sold in June and July. You can see that in the Bitcoin and Ethereum treasury companies. I also asked, have you sold any of your stocks or crypto since 2025, July? And over 50% said they didn't sell anything. So what are you guys waiting for? Like, what is everybody waiting for? They're waiting for Raoul Pal to say we're at the top of the market. But by the time Raoul Pal says that we're rotating into a bear market or that we're in a downtrend, he's already sold his crypto and stocks well before he says that. And so you are going to be running for the door. On this channel, guys, we sold months ago at higher prices than we're at today. And people are still saying that I was wrong. Clearly I wasn't. And then we have Michael Burry. Now, Michael Burry is well known for the Big Short in the previous financial crisis, and now he's challenging the AI trade with big short bets on NVIDIA and Palantir. So the hedge fund manager from Big Short is calling the top in two stock market favorite plays and somewhat contradicting himself in the process, they said. His asset management firm bought put options covering 5 million shares of Palantir, a trade valued at $912 million, and puts for 1 million shares of NVIDIA, valued at $187 million, according to his quarterly report that was submitted at the end of September. So a little bit more than a month ago. Now, we don't know exactly what his strike prices are for these puts, but guys, NVIDIA is at all-time record highs, and Palantir is similar in there. NVIDIA is not just at all-time record highs, it's the most valued company in the history of the planet at over $5 trillion. It definitely looks like it's a bubble. And for anybody to think that we're not going to have a correction, especially knowing that NVIDIA went from 95% market share in China to zero, and there was no movement in the price to the downside. And now we're seeing all this circular financing going on in the AI space. Well, again, there's going to be a lot of people betting against those bulls, okay? Just because you're buying at all-time record highs doesn't mean the price is due to continue to go higher. In fact, it's likely to go lower. And he posted these charts saying, these aren't the charts you're looking for. You can go about your business. And, you can pause the video if you want to see these charts that he posted. Meanwhile, we're seeing other concerns and other red flags in the market, like Google owner Alphabet tapping the US dollar and the euro bond market. Google is tapping this market in a multi-tranche senior unsecured note offering. The company will use the proceeds for general corporate purposes, including potential repayment of a portion of its outstanding debt. So they're raising more debt to pay off old debt. How does that work? Anyway, Alphabet took out fresh debt in April, tapping into the euro debt market for 6.75 billion euros, or just under $8 billion for the first time. $8 billion. Oracle itself saw $18 billion in September in new debt, while Meta raised $30 billion in bonds last month. Demand for cloud and AI services is on the rise. These corporations are saying they're capacity constrained, meaning they don't really have any more money. Layer on top of that the potential demand that could be coming from AI computing, and you say to yourself, there is something there. That's according to one analyst. But in my view, this is a huge risk, because if AI isn't a bubble and we do correct, all that debt is now significantly overvalued. And this is a concern. And that brings us to the AI plays like Bitfarms, which we've talked about extensively on this channel. And now I've been seeing a lot of posts, people calling a double bottom yet again on Bitfarms. Now, I don't necessarily know that I agree with this. The squeaky mouse on X said Bitfarms has confirmed the double bottom and is now on its largest volume shelf with a gap of to $4.50. We should start seeing momentum build following others in the sector. Now, going back to what we talked about in the beginning of this video, right? About number one, me being right. Number two, us being way ahead of the curve. But number three, I think there's a post here that I wanted to show you. Yeah, this is the post from the Pigeon on X. He said, when someone buys Iris Energy, for example, at $60, which is all-time highs, instead of $3, where it was basically about a year or two ago, the process works like this. To protect their identity, they defend the stock, attack anybody who is short or not bullish, and double down. All classic cognitive dissonance. Price becomes their moral proof. This is how bubbles work. And I would completely agree. Bitfarms, I don't think is double bottoming. We haven't even bought, I mean, this is not even a bottom, right? I posted in August the double bottom for Bitfarms right here. You can see it on this chart. This was posted in August on my channel. I said the cleanest chart I've ever seen. Comment if you're bullish on this. This is when Bitfarms hit 70 cents, 68 cents, twice this year. That's a double bottom. Clear W pattern. This is the clearest chart I've ever seen in any stock. We called that. But that does, and I'm still bullish on Bitfarms. Don't get me wrong. I'm bullish on Bitfarms. But we've already gone up now basically 10x from 68 cents to $6.70, something like that. And we've pulled back a little bit, as has a lot of the AI plays and a lot of the Bitcoin mining plays that pivoted to AI. But you guys have to be really careful because people are now buying at $4 and $5 and $3 and $6 Bitfarms. And so this is their buy price. This is their floor, but it doesn't mean it's the floor for the stock. I am still very cautious, even though I'm bullish on Bitfarms and Bitfarms' capabilities and their pipeline for energy and all of that. I'm very bullish. But if AI is in a bubble or the macro market pulls back significantly, right? Let's say NVIDIA goes from $5 trillion to $4 trillion. It's a 20% decline. That's not that big of a deal, right? I mean, if you think about Tesla from 2024 into 2025, yeah, I think it was 24 into 25, maybe it was 23 into 24, but one of these years, it pulled back in just the first 3 months of the year by 50%. That was Tesla. Nothing really fundamentally changed about Tesla, but it pulled back 50%. Now it's recovered since then, but that's what I'm still concerned about. So I don't think that we're at the bottom for Bitfarms. I don't think that there's no possibility that we're not going to correct back down. I still think that it's highly undervalued from a market cap perspective. But to call a double bottom now, when this chart, this is the daily chart effectively from October, generally speaking, we don't see bottoms form over the course of days or weeks. It happens over the course of months, as you can clearly see from the zoomed out Bitcoin chart. April, July, or April and August double bottom in Bitfarms. That's when the double bottom was, at least in my view. So just be a little bit more cautious about Bitfarms and thinking that we hit a double bottom, right? This chart looks very euphoric, right? And so we could be in complacency phase and we could draw down, right? Because remember, the market prices things in before, so it's buy the rumor, sell the news, right? Because you're buying the rumor, that's the lead up, that's the market pricing in announcements or announcements of integrations or deals like we're seeing with other companies like Cipher Mining, which just made a deal with Amazon Web Service. And what happened with Cipher Mining? Straight up, right? But what happened when we went straight up? We went from $18 to the announcement of a partnership, a 15-year lease with Amazon. Amazon went up from $18 to $24 and then pulled back. And there's a lot of volatility here, right? Could we go much higher? Of course we could. But now it's priced in. The pricing in is about $24 to $25 for Amazon deal. So now the market, just because you bought here doesn't mean that we're going higher. The announcement was already made. And the markets are forward looking. So these things are priced in before they actually are announced. And by the way, this doesn't just go for Cipher Mining, it also goes for Iris Energy. And this is where the Pigeon on X said, that they're going to defend their stock, attack anybody who's bearish or not as bullish as they are, and double down. And these are classic top patterns. These are classic bubble patterns. He said, "You are the exit liquidity. I feel horrible for you, so I'll explain with grace one last time. IRIN or Iris Energy just sold shareholders out for exit liquidity, right? You are the exit liquidity if you're buying at this point. And let's just be clear about Bitfarms, right? I called the bottom of Bitfarms at 68 cents. We're now at $4. You're not a genius for calling the stock out now, you know? And the same thing goes for Iris Energy. I mean, if we pull up just the 1 year chart on Iris Energy, the low was about $5. We're more than 10x that right now. People bought down here. You are the exit liquidity for them up here. If you're buying up here, they are selling. And people will say, no, they're not. No, they're not. No, they're not. They are. They are. And your inability to see that, not you guys, because you guys who watch my videos get it, but this is the people that we're trading against. They don't understand this. They're buying into Iris Energy now at $70 thinking they're a genius, saying, well, this YouTuber said this and this person on crypto Twitter said this. It's like, yeah, but they've also been in since $5. TerraWolf is another example. TerraWolf, we've been talking about since under $2. Now it's at $16. If you bought at $2 and you haven't taken any profits off the table, what are you doing? The people who are pumping it right now, they're the exit liquidity. This is end stage of the cycle. Anyway, he goes on to say, he says, Iris Energy must spend or finance roughly $5.8 billion immediately with Dell for NVIDIA hardware. The deal effectively turns Iris Energy into a hyperscaler landlord financed with debt. If the AI market softens, aka the bubble bursts, Microsoft can simply defer their utilization, meaning stop using it, right? Iris Energy still pays the power, the staff, and financing costs on idle data center racks. It's a lopsided deal. If GPU demand or rental rates explode, Microsoft enjoys cheap, locked-in compute while Iris Energy's revenues stay flat. Iris Energy sold the top of the cycle at the bottom of the pricing curve. This is very important to understand. Jim Chanos has also been calling this out extensively. We'll get into that in a second. But this is the key difference, in my view, between Iris Energy and Bitfarms. Bitfarms is not buying the GPUs. They are trying to own the energy. Because if they own the energy, they could say to the companies, oh, you want to use our energy? Okay, you bring the GPUs, we'll let you use our data centers, but you have to fund everything. We're not buying the GPUs for you to lease out at low rates when demand is extremely high for the energy. They're doing it very different. This is why I'm still bullish on Bitfarms. I'm not foolish when it comes to taking profits out of the market, but I'm still bullish on Bitfarms because Bitfarms is doing it very different than the rest of these companies. And in the medium and long term, Bitfarms, I think, is going to be stronger than a company like Iris Energy for many of the reasons that are being highlighted here. And Jim Chanos, by the way, has been calling this out for months. And the Iris Energy bulls are ignoring the warnings and saying, no, you're just an old man who's complaining about everything. And it's like, yeah, but he's right. And now Pigeon is saying this on X. He said, do the math. The returns will be single-digit margins for Iris Energy. There's no roadmap for co-development, equity participation, or intellectual property sharing. Who's running this company? This might be the worst structured deal I've ever seen, and just sold out shareholders. Iris Energy negotiated a headline for exit pump liquidity on retail, masterclass shitcoin behavior. Iris Energy is the chain link of miners. And so that's kind of where we're at. And Austin Lieberman, who on X has 63,000 followers, he writes about high quality stocks with 10x return potential. He said, before you get too excited about Iris Energy and Microsoft deal, read this and tell me why it's wrong. The deal results in a $700 million net loss over 5 years, actually proving the Iris Energy model in its current state is neither profitable nor will it become profitable. How do they address this? Well, they're not going to because they don't care. They do not care because, again, the stock is up from $5. So if it's overvalued at $70, it's overvalued at $70. But the stock was $6, $5. So what is the pricing on that? It went from under $2 billion market cap to almost $20 billion market cap. Clearly, the company's saying this is a little bit overvalued at current rates, and retail doesn't seem to care. So retail will keep bidding it up, and they will keep taking profits. That's what's going to happen. Jim Chanos, somebody said, "Where's Jim Chanos?" after Iris Energy announced this deal with Microsoft, and he said he's here, wondering why you are so excited about an uneconomic deal for Iris Energy. $1.65 billion of annual EBITDA is before $1.16 billion of annual depreciation of the GPUs with a 5-year shelf life and $200 million on the data centers, $1 million per megawatt annually. That's $290 million of EBIT on an $8.8 billion investment, or a 3.3% return on capital. Ugly. But the bulls don't care. The bulls don't care. They just think it's going to keep going up forever. And this, if you didn't think we were in euphoria in the middle of 2025, we're in euphoria now. Although I personally believe we're past the euphoria phase. I think we're in complacency phase because everyone thinks, oh no, the market's going to keep going up. I mean, look at what happened already. We already went 10x. We're going to go another 10x. Maybe so, but also maybe not. That same guy that we just highlighted in this video, Austin, also said, the struggle I'm dealing with as an Iris Energy shareholder grounded in reality. I'm about 95% confident this is a short-term top in the share price. I think after earnings, they announce a raise, meaning raising more money, will further dilute shareholders, but the hype could drive the stock higher. And I would agree. Again, buy the rumor, sell the news. The news is that they have a deal, a partnership with Microsoft. Okay, what next? What next? We got the announcement, the price moved up a little bit more, and the smart money is taking profits. The dumb money is buying here and saying, we're going much higher. They now have an announcement with Microsoft. It's like, okay, but the market already priced that in. We already went up 10x because of that. So it's already priced in. Buy the rumor, sell the news. And apparently these general concepts about investing have just been completely ignored and forgotten by the investors in the space. And this is who we're trading against. And it is official. Sequins, a Bitcoin treasury company, were the first Bitcoin treasury company to dump their Bitcoin. It's done. It's over. They capitulated. We covered this in a recent video that they were moving a large quantity of their Bitcoin over to Coinbase. And there's only one reason they would move it to Coinbase is to sell. And the bulls were saying in my videos, no, Cryptoviser, that's not happening. They're not selling. They sold. In a recent press release from the company, Sequins, a pioneer in adopting Bitcoin as its primary treasury reserve asset and a leading provider of cell IoT semiconductor solutions, announced the redemption of 50% of the convertible debt issued in their recent offering on July 7th. The strategic move was funded through the sale of 970 Bitcoin. Well. So we have this company that bought the Bitcoin through the debt on July, which was the top. That was the euphoria. And now they sold it, 970 million of it, within 6 months. And by the way, this is the first Bitcoin treasury company that we're hearing about doing this, but the Ethereum treasury company, ETHZilla, just sold a large quantity of their Ethereum to buy back shares of their stock. So it's already underway. Meanwhile, we have this video that says Bitcoin isn't broken, it's maturing. Jordi Visser, who's with 22V Research, was on the Anthony Pompliano podcast, and he said, I explained why the consolidation is actually Bitcoin's silent IPO in our weekly conversation with Pomp. Well, Retail Rye on X, he wrote this. He said, the reason that everyone enjoys hearing about Bitcoin's IPO moment is because it's comforting to feel early. Here's the reality. This thing has gone up by 7 orders of magnitude in just about 16 years. We're not early in the price, market cap, or time. And I would agree. I mean, and think about Pompliano's company, ProCap. Also, I think it rebranded to Columbus Capital Corp at BRR, but you can. I think both are still on the open market. But ProCap purchased at $100,000+. That's their dollar cost average. So we're not early, right? I mean, in the grand scheme of time, yeah, we're early, but I also don't think that Bitcoin's going to be around for hundreds of years. I think Bitcoin will probably be around for like 100, maybe 200 years max. Because remember, the Bitcoin the Bitcoin halvings effectively end in about 2030 or something, 2130, because there's going to be no more Bitcoin to mine. And so what's going to happen after that? There's going to be new technology. Probably there's going to be quantum computing that will be able to break Bitcoin cryptography at that point. So it'll have to be something else. And remember, the average fiat lifespan is about 27 years. So whether Bitcoin is still around at that point, I don't know. I'm not going to be around, and probably many of you won't be around either. So it won't really matter. But we're not really that early. And I would agree here with that. And so this is where we're at, guys. We're at the end of the bull cycle, and nobody wants it to end, which I understand. I get it. But you can either be ahead of the curve, which we have been on this channel all year. All year. We've been ahead of this channel, and I've had a lot of people, social media, in the comments saying that I'm wrong about this, I'm wrong about that, I'm wrong about that, I'm wrong about that. Just go to my YouTube community tab and look through the posts from months ago, and you will still see that I was correct. I was correct. Just at the beginning of October, we had the flash crash, and then we pushed back up, right? We went to 105,000, then went back to 110, and people are like, you see, that was the bottom, that was the bottom. And I'm like, that's not how bottoms work, that was a warning. I even posted on X right after that happened. The trend has been down. Don't fight the trend. Most are saying this is the dip to buy, but I think this is a final warning to get out. I have been warning about this for months. And people were like, no, Cryptoviser, I think that we have a little bit higher to go. I think that the cycles is extended, all this stuff. But when I'm recording this video, we're now below $105,000 and going lower. And I've posted countless videos that we're in a bull trap. I would definitely recommend watching this one. Crypto is in a bull trap with Jerome Powell's face on the thumbnail. This was from, I think, end of August, early September. But it was literally the Federal Reserve telling you to get out of the markets, and nobody listened. People just, they wanted to hear what they wanted to hear in the markets. And so in my view, the cycle has been over. We're just in the volatility of the rotation phase. And at the end of the day, it is what it is. I told my viewers long ago, by the end of this cycle, I want to be completely out of crypto, completely reset the crypto portfolio. And we're pretty much there. We are pretty much there. And in terms of stocks, I mean, I think Michael Burry is onto something here with shorting these AI plays that are all-time record highs, not just in stock price, but also, record historical global highs in terms of valuations of these companies. And once it gets overheated, the drawdown is just around the corner. And this can be very clearly viewed in the MicroStrategy chart. I mean, people are still bullish on this, even though Bitcoin's literally at all-time record highs and MicroStrategy's down just 40% since the July euphoria in the markets. And now that we have Bitcoin treasury companies selling their coins, they're selling their coins. This whole thesis about never sell your coins is done. It's over. It's kaput. And so what does this mean for the rest of the markets? Well, we will find out in due time. But let me know what you guys think. Don't forget to give the video a free thumbs up. Check out my other videos on this channel, and I'll see you when I see you. Crypto on.